Good evening, everyone. My name is Shiki, and I'm delighted to be here to moderate this panel. For a brief background about myself, I'm a specialist in digital transformation by profession, and my passion is running a not-for-profit to bring tech education to underprivileged youth. Currently in Japan, I work with Elevendi. Elevendi started as an initiative by the Monetary Authority of Singapore in 2016 as a conference for all stakeholders to have a dialogue about the opportunities, challenges on ground, future trends, and a forum for collaboration. 8 years on, Elevendi has grown into a not-for-profit which leads the Singapore Fintech Festival every year, which brings close to 66,000 attendees across 150 countries. We kick-started Elevendi Japan 2 years ago, and this year in March, we had our second Japan Fintech Festival with 2,600 attendees across 50 countries. Now, moving on to our panelists, before we start the discussion, I would like you to briefly introduce yourself and tell us about yourself and what you do in context of our discussion today. Okay, Jesper.
I'm Jesper. I've been stuck in Japan for over 40 years. I used to be the head of research at JP Morgan and a couple of other financial firms. I sit on several boards of one is a healthcare startup, one is a cybersecurity startup, and one is the payments startup here in Japan. I also sit on the board of the Okinawa Institute for Science and Technology. Looking forward to our discussion.
Hi, my name is Sam, and I'm the co-founder and chief executive at Habito. I haven't been stuck in Japan for 40 years, only 2. It's been a pleasure. I'm Italian by origin, but I lived and worked across, let's say, 4 or 5 major financial centers in London, New York, Dubai, Singapore, and now Tokyo. And so contextually, what we're going to talk about today is how sort of Tokyo sort of sits within that sort of global peers, particularly within fintech. I've had the privilege of, I guess, experiences these different ecosystems, both as an entrepreneur and also as an investor. And so I'll be bringing both these aspects at the table. Really looking forward to the conversation.
Hi, I'm Supriya Sen. I'm a banker and an investor in a former life, basically project and infrastructure finance for over 30 years. But I'm also a strategy consultant and now board director of several firms, both financial institutions as well as startups. And the reason why I'm excited to be here in Japan is because I have lived and worked across the world in various financial centers, whether it is Dubai or it is Singapore or it is practically any new and emerging market like Philippines and India and China. But I think the time is just right, and it is just wonderful to be here. Thank you.
Hi, good evening everyone. My name is Lionel. I'm from the MAS. I'm a career regulator, so spent 15 years serving. Largely an AML regulator, but in the past 5 years I've dabbled in payments fintech. And now, as the title suggests, I do sustainability, so green fintech. So that's the regulatory side of my remit. I also double hat, and why this topic of developing startups is close to my heart is because MAS also itself has a penchant for incubating and spinning off its own startups. And specific to my line of work, we've been working on a thing called Project Greenprint in the MAS for the past 3 years or so. Now that project has ceased to be a project and is now spinning up into an actual entity running its own platform. So my second life is running that entity and platform. So increasingly, there will be that transition away from MAS as I start to become a startup owner myself, right? So that's why it's particularly close to my heart. Chiki?
Thank you, everyone. Yeah. So my first question today is for Jesper. Jesper, as a Japan optimist, what would you suggest to newcomers in Japan on the type of opportunities that exist?
So the key issue in Japan is the generational change. You know, you've got the Showa generation, sayonara. So the baby boomers are going out. Japan is a country that you've got to remember was the success economic model in the world. It took less than 20 years for Japan to become from zero the number 2 economy. By the mid-1980s, Japan's stock market capitalization was actually higher than that of the United States. So there was an enormous amount of pride. The Mitsubishi way, just the Japanese way, was the best development model, the best entrepreneurial model of its generation. And so then with the bubble collapse, everybody held on to this, and the Japanese are very nice, they don't like to fire anybody. Now, that generation, that legacy pride is going out. One number, the average age of a main company in Japan, of the listed companies, of the new president and CEO, has gone from 69 to 57 over the last 18 months. And that's a new generation of Japanese. They want to create their own legacy. They're not married to the old way of doing business. And as a result of that, for you as entrepreneurs, now you've got the opportunity. And whether it's a tech-based solution, whether it's a new product, whether it is deep tech, now you can actually get into the companies, get a hearing, and make your mark. While during my time, during the 1990s and the early noughts, you simply could not get into the system. Now you can. This is why you should be here. And that's true, by the way, across all sectors, whether it's finance, whether it's the B2C, business applications, or whether it is deep tech research applications.
Thank you. Samantha, you have the experience of setting up companies in different parts of the world in Japan. So how would you compare how would you see Japan in context of the global innovation?
So I'm going to preempt this entire conversation. My background is actually at the intersection of finance and tech. So I have quite a deep sort of level of expertise in the fintech space. But I suspect that many other verticals would have similar characteristics here in Japan. The short answer is that Japan is an emerging fintech ecosystem. It has all the hallmarks of what makes it emergent. The startup density here in Japan is certainly lower than what you would expect in a country that is the 4th largest economy in the world, 120 million people, albeit, as Jesper said, a lot of those probably over 60. But so that, I think, is a characteristics of an ecosystem that is emerging. If you look at the success rate of the startups in Japan, you have very few that escape the boundaries of the Japan environment. That's certainly a characteristics of an ecosystem that has not yet emerged or graduated to a global stage. From an investor perspective, Japan has certainly become a more interesting place to be. The yen, obviously, 150 plus to the dollar certainly helps. But it is still a place where, as a startup, exit routes are still far and few between, normally through the mother, typically, whereas instead most of the other sort of startups around the world exit through trade sales. And there are many other options that exist in market, I would say, at every single stage of a sort of startup life cycle. Finally, the depth and the breadth of the capital structure in Japan also needs to follow the evolution of an emerging ecosystem. Now, the good news is that many other ecosystems have developed over time, so there are blueprints that one can look at to better understand what are the hallmarks or what are the building blocks of a successful ecosystem.
Thank you. I think that leads me to the next question. So Supriya, could you just share with us, what do you think is the blueprint for a global financial hub? Could you please put up the slide?
Thank you for that question. The name blueprint really suggests that I just created this slide, but basically I think of it, I think they're not able to.
Put the slide. Could we have the slide, please?
Anyway, while
Yeah.
putting it on, I just like to think of an ecosystem which is driven by a couple of very important trends. The first, that digital technology has made possible what was never possible before, number one. On the other side, the fact that the climate emergency is bringing various actors to fit into the ecosystem brings tremendous opportunities. So this slide looks complicated, but if you start looking at it as concentric circles of stakeholders, I like to think of it first, individuals and businesses. They need to have the digital identity, they have the mobile connection, they have the bank account and the tech infrastructure, which makes it possible for individuals and businesses to have that unique way of transacting in the market. But then you have the traditional open financial infrastructure. The financial architecture has to become open. Why? Because you not only have private capital, banks, financial institutions, insurers and the capital markets, but it has to force open the APIs to allow the startups, innovative startups that are actually able to bring new solutions to complex problems in customer interest come to work on this platform. And then supported by dynamic regulatory policy, where you have the regulators, central banks, of course, compliance and risk is important, but on the other hand, you do enable this opening up for the common good through sandbox, a regulatory sandbox, APIs, and to have hackathons where large corporations can talk to these small startups, and then there's even a death of the worse in favor of the better. So you don't have these zombie companies just continuing on, but the fact that a Darwinian sort of thing comes to play. And finally, the collaborative partnerships that mean that you not only bring research institutions and university students as well as enable growth of talent and skills, but the founders put in risk capital and that risk capital gets a return, and this is all under this rule of law, stability, the property ownership, the IP, and that leads to what we are looking for, which is a decentralized, diverse, inclusive, democratized environment towards the sustainable financial and sustainable economy.
Thank you. My next question is for Samantha. Samantha, if I look at this as a blueprint, what I would like you to do is just if you can share with us some of the things which are required on the ground for an ecosystem to compete globally.
I wish that there was, from my perspective, as I said, both as an investor and a startup, I actually don't think there is a silver bullet that actually works across every single ecosystem. It's very contextual. And so Japan, if I've learned a little bit about Japan, it's actually uber contextual environment and culture. But there are some common traits. There are some common factors that you see across all successful ecosystems. And it starts with people. Humans and I guess their desire to build something new and their entrepreneurship and their innovation. So the quality of the talent pool is very, very important. One question obviously here for Japan specifically is what is the spark that triggers this dynamic evolution of sort of the talent side. One observation, for example, in London and New York, what triggered a lot of the startup ecosystem, particularly in the fintech space, was actually the 2008 financial crisis, where a lot of very competent talent that used to work in large financial institutions left, some voluntarily, some less so voluntarily, but found themselves in an environment where they had the opportunity to create, reinvent, and do better than what had happened before in the global financial crisis. So there was a spark. I'm not sure what might be the spark here. I haven't been long enough in Japan to actually better understand that. So people is a key ingredient. The second ingredient, and maybe we'll come back to that later, is capital. And it's what I call sort of smart capital. So capital that exists at each stage of the evolution of an innovative company, of a startup, with the right risk-reward appetite. Here in Japan, there's a little bit more than I think should be done to get the investors to be a little bit more risk-friendly, particularly in the earlier stage of that investment process. And for those that are regulated industries, healthcare or financial technology, the role of the regulator is foundational, is very, very critical. And I would say it's almost market making, because a lot of innovation in a regulated environment happens through regulatory arbitrage.
If I may, I just want to follow up here on the spark, and this goes back to the generational change. My favorite chart right now is if you look at the best and the brightest. If you look at the young men and women who joined the Ministry of Finance and METI, the Japanese government, right? And you say, fine, these young men and women join in their early 20s, and how many of them quit while they're in their 20s? And that line looks like this. Totally flat, nobody leaves. Over the last 5 years, this has shot up. And you ask, where do these people go? Do they go to Mitsubishi? Do they go to JP Morgan? No. 2/3 of them actually go to startups. And that tells you that Japan, what is changing? What's different? You've got a young generation that is no longer going to do business as usual, that is ambitious, that is not going to wait around in the salaryman fashion of Nenko Joretsu, what the escalator system of being paid and rewarded. They actually want to take risk, and that's where for you guys the great opportunity is. Because I can tell you, when I was the head of research at JP Morgan, hiring a top analyst or hiring an analyst from Nomura or from Mitsubishi took 2 years of dining and wining. I had to convince, the in-laws, that JP Morgan was a perfectly fine company and it's safe to change into. Now that you actually do have the motivation there, that there is ambition, now it gets interesting, because you know what? Now, and it's interesting, one of my friends is actually the head of Jinji at Mitsubishi Corporation. And every time, when they do these recruitments at university now, he cries. We go to a bar and he gets horribly drunk and he said, my God, I used to have the best job in the world, because all the young men and women from Keio, from Tokyo University, from the top university, they were begging me to hire them. Now, over the last 4 or 5 years, the tables have turned. They're looking at me and say, so, Mitsubishi, what are you going to do for me? And that's where you guys in the startup ecosystem come in, because you can opt for, whether it's stock options, but it's not just money, right? Money is one important motivator. The other one is, can you actually build a career? And that's where it gets very exciting. That's where the opportunity set right now in Japan is absolutely second to none. Go out and get them.
Thank you. Thank you, Jesper. I think my next question is for Lionel. Lionel, as a head of Green Fintech for MAS, what do you think are the priorities for the regulators?
Well, I could be flippant. Test. I could be flippant and just say sustainability because I'm in the Green Fintech office, but maybe I speak a bit more broadly. I'm looking at Supriya's slide, and it's actually a very interesting slide because, as you all can see, regulators and central banks are placed there. And if I were to opine as a regulator with a specialization in fintech, it is just a matter of redrawing the lines and the arcs just to put the regulator as the center, and then thinking about how we might apply our traditional tools, regulations, frameworks, supervision, inspections, enforcements, blah, 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 to capture this very complex environment. And I think that is the foremost challenge that a regulator will face, which is the fact is you're going to be sitting on top of legislation and practices that are to some extent years or decades, maybe something different degrees of being outmoded. In Singapore, we have embarked on a number of regulatory reviews and to the extent legislative reviews. The example that's the most cited is payment services. if only because we spent 4 years from 2016 to 2015 to 2019 engaging the industry and saying, look, we've got a bunch of outdated regulatory frameworks and legis. Money Changes and Remittance Act was from 1970s, for instance. And how do you redevelop all of that into a framework that is able to capture the elements that are laid out in Supriya's slide? And moreover, recognize that all these elements are not static elements. They're all going to change with time. And so how do you build in a level of future readiness? And the answer that we had, or we landed on, was activity-based, multi-module kind of legislative framework. We published that in 2019, and even today, that is still being consulted and iterated with the industry, which just shows you that you've got to build a framework, and it's got to be forward-looking. At the same time, you have to continue to accept and engage the industry feedback to make sure that whatever you are implementing, then the way it's interpreted continues to be relevant to the activities today. So that's a good example, and I cite this example not as an example of how Japan can learn, but actually it's the other way around. When we created that Payment Services Act, one of the countries that we came by to consult with was Japan. Because if anything, when it comes to digital assets, we saw that the regulatory frameworks and perspectives here were actually more advanced than many parts of the world. So that's something from a regulatory standpoint. The other thing is, you also realize that a regulator's typical traditional toolbox starts to get limited in a more complex environment, right? So issue a framework, everybody goes out to enforce it, practice it, and then we figure out how to enforce it through supervision, etc. It only takes you so far because there are so many drivers that are at play here. Then it becomes, I think, a challenge to regulators, especially those that are a bit more forward-leaning. I'm also thinking of the ones here in Japan, Hong Kong, Singapore, and other parts of the world that are probably well documented. How can you engage the industry and work with and collaborate with the industry to develop feedback loops, right, in a manner atypical to the traditional toolbox? So I cite again the Singapore example. For us in the MES, one of the things we did several years back was to embark on a study of how financial services will look like in 2030. So again, it's a big consultancy piece, massive amount of industry engagement over 2 years, and basically summed up in 3 things. We identified 3 themes. 1, digital assets. That's going to be key. Sustainability, can't run from it. Embedded finance is probably the most pervasive way to get financial technology out into the hands of everybody, inclusiveness. These 3 themes. And then it was, that started off a whole exploration around how can we pivot the existing levers we have, regulatory or otherwise, to channel that dynamism of the industry in these directions. So a good example are platforms like the Singapore Fintech Festival, Japan Fintech Festival, Japan Fintech Week, or even this event where there is discourse that happens between the industry, and to the extent that regulators are willing to sit on a panel, then yes, regulators. From an MES standpoint, we also harness funds, right, grants. There's a Financial Services and Technology and Innovation grant that we have applied, and obviously the way that you scope the issuance of those grants can tie to those priorities that you have identified. And that has led to, I think, a commitment of $500 million, Singapore dollars, of which 60 to 70% has already been dispersed to support innovation in these strategic directions. So I'm thinking beyond regulatory frameworks, how can regulators find other levers to engage the industry, communicate what are their strategic priorities for that particular financial center, and more importantly, its placement in the global network, and then figure out how to mobilize the industry towards these avenues. So there will always be some level of play for startups in this environment. I think what's most critical is having an understanding of strategically where a particular financial hub is headed. If there's clarity of that, and there is a commonality in terms of the alignment between financial institutions who are going to be, let's say, your clients as a startup, right? If you have that clarity, then at least you know which direction of move they are headed towards, and whether the product offering that you have will be in line with those interests. So I think of it from that perspective.
So I can see that the role of the regulator is evolving along with the industry.
It's a bit like what Jesper said, generational change.
That's interesting, yeah.
But
You
go ahead.
Yeah.
I'd just like to add, this seems a right point to make a sort of plug for an organization I used to be associated with. It's also part of the Elevandi ecosystem. It's called Apex Platform, which was actually an initiative of MAS and funded by the fund that Lionel just talked about. What is interesting about this platform is that financial institutions, including insurance and big banks, can talk to fintechs from global, not just in Singapore. But the fact that they have hackathons where the fintechs that are registered on the platform can apply their innovative solutions to the challenges put by the members. This something is the beauty of digital, where digital is actually enabling you to thread this, because I go back to a point which Sam mentioned earlier, that startups also need this sort of encouragement, support, funding from the public sector as well in the initial stages. And so there was a fund which was part of this, which supported those deserving fintechs which in line with the strategies. So yeah, so these are sort of things we can do in the public sector as well.
Yes, Jesper.
It's just interesting because, I mean, you know, the Japanese regulator, I mean, they're on top of their game.
Yeah.
You know, I mean, this is, look at, I mean, crypto, right? Yeah, Japan is not the Wild West. Well, yes, the train runs on time, right? And, you know, Japan's, you know, industry regulation is actually much more interesting than the FSA in the case of fintech, because the obstacle you'll find in terms of if you actually want to scale up, the obstacle is not the FSA. The rule book is pretty clear. The obstacle is the incumbents, is the rent-seeking behavior of the industry associations that you actually have, because they are the ones who actually do the secondary inspections, and you know that's where you're going to run into problems and into difficulties. So it's quite interesting, you know, that you actually have, you know, you've got a unified financial regulator. When FTX went bust, no Japanese person lost money because, you know, guess what? In Japan, you've got to properly collateralize, you know, any of your holdings here. Oh my God, what a novel idea. It's like, yes, right? So it's very, very interesting, you know, that the regulator is very good, very tough. There is one element which is where the industry associations are an obstacle, which is the Japanese love one thing. They love over-spec, right? So when they did, you know, remember JR, the Suica, right? So this is a card, right? Like what you call the Oyster card, right? Your debit card, you know, for the subway system. The spec that was set is that, you know, okay, the biggest use case is obviously going through the gates when you enter the subway, right? And so the spec was 100 people per second. Now that's impossible, even for Usain Bolt, right? I mean, I don't know what the correct number is. Do you need 10? Do you need 5 per second? Something like that. But it's like, it's 100 people per second on one of the things going through, which is insane, but that was the spec that was actually set. So as a result of that, that little Passmo or Suica card that you have is actually a very powerful machine, except that it's over spec.
Thank you. Actually, there's one point I would like to touch upon, which is about leadership and governance. So Samantha, could you just kind of tell us what do you think should change in terms of the leadership and governance in organizations in Japan to kind of promote more innovation?
So thank you for the question. I have only been here for a couple of years, so maybe the question would be a little bit more generic about the general interaction between startups and corporates. Right. And I would probably follow up with what Jesper was saying, that you know, whilst the regulatory framework is solid, is stable, is reliable, and it's actually has an easier accessibility that sometimes it has the reputation for, because the Japanese reputation.
They're curious.
Absolutely. Conversely, I do think that the engagement with financial institutions and generally with the incumbents is actually quite problematic. And it's not just problematic in Japan. I mean, it's problematic because, and this I'm not saying this, I'm saying something pretty obvious. the time frames for anything that happens in a startup versus what happens in a large financial institutions are incompatible. And what's at stake in a couple of weeks or in a couple of months, which would be the life and the death of a startup, means pretty much nothing when it comes to an institution. So actually, at the very heart of how you create an ecosystem that not only has the individual components that work in isolation, but how the components interact with each other to create a better outcome, which is hopefully innovation, better services that lands in the hands of people. Ultimately, that's the outcome. That is where I think Japan has a little bit of road still to walk. And it is, this one I'm speaking from the perspective of a startup where very often I hear the question, we'd love to collaborate with you. Well, tell me what collaboration means, because what we need in order to be effective, in order to operate, we need a modicum of technology that most institutions in Japan just simply don't have. So there's a practical barrier to executing the vision at ground level. How do you solve for that? I actually don't know. What I have seen in other environments is that over time that relationship has gotten better. That relationship has become more collaboratively, but largely because the incumbents have made enormous level of billions of investments in getting closer to where the startups are at. In other words, in digital transformation. And I know that here in Japan, I don't know the specific number, but I know that every company is trying to go through that journey. So the insight, I would say almost like the intuition that I have here is that Japan is definitely changing. I can feel it, I can see it. And as a foreign entrepreneur, I wouldn't even have attempted to come and build a business in Japan if ultimately I didn't think that there was an opportunity. However, I think that the question is not whether Japan is changing or not. The question is whether Japan is changing in time. And because Japan is changing, but so is everybody else. And so the level of competitiveness of Japan as an ecosystem is obviously, especially if you look at it from an outsider coming in, a matter of comparison and alternatives. And capital and smart entrepreneurs go where the opportunities are deepest.
And that's where it's interesting. So again, talking about Japan for 30 seconds. I mean, it's wonderful. Everybody is older than me, and everybody gets older faster than I do. 1 in 4 is now over 70. So, don't copy, if you think you want to succeed in Japan, just doing what you do to appeal to a young market in India, what you do to a young market in the United States of America, is not going to work here, right? If you can find me a fintech solution that actually a non-digital native can actually cope with, a non-digital native who's got a 1 in 7 chance of developing Alzheimer over the next 5 years can cope with, build me that fintech solution and you're going to make it big in Japan. Concrete proposal, if you want to change and maybe Sushi Tech Tokyo can adopt this, right? I think mandatorily every listed company in Japan must have one outside director who is a former startup founder.
I have another.
Yeah.
I think
This is getting interesting now.
It must be Italian too.
Yes.
Huh?
must be Italian. Why not? So we're getting into I think the topic of sort of policies, and but one observation here, I actually think it really makes a difference. What I really struggled when I entered Japan as an entrepreneur was accessibility. Everything was really hard to get to. Ultimately, I found a way to get there, but just by scraping my way around it. So if I were to say the biggest challenge as a foreigner entering Japan is really sort of accessibility for everything, whether it's like getting your first Suica card or getting a bank account or figuring out how to activate your Wi-Fi. And I think a large part of that accessibility is actually a language barrier. And again, I'm probably talking about the obvious here, but accessibility for Japan to be able to effectively collaborate, cooperate, and compete globally requires the majority of Japanese being able to speak more English. And so my policy is that actually have every single student entering university in Japan having to pass the English proficiency test.
I think it's similar to how a foreign student, when they come into Japan University, they have to do 1 year of language training. Probably that's got to be compulsory both ways. Yeah, that kind of makes sense. Jesper, I just want to take you back to this thing about the talent. Now, what I want to understand is how do we transform this labor market, because the demand is increasing, and the talent pool.
Demand, supply, blah, blah, blah. It's a buyer's market. And as you know, I want to be reborn as a 23-year-old Japanese.
Yeah.
It's fantastic. University students, 98% of all universities have a job offer for full-time employment, a year and a half before they graduate, right?
Wow.
No wonder anyway, never mind. But, so the talent, the big question is, right? And, to me, the most bullish part about Japan is just something very concrete. How do I compensate human capital? How do I compensate talent, right? And again, Japan is very proud, right? I've got Nenko Joretsu, I've got a seniority-based system, right? And a year ago, one of Japan's dinosaurs, I apologize if there's anybody here from NTT, NTT Corporation, which is Japan's most unionized company, they've got a new president, and the new president, as of last year, is introducing pay for performance and doing away with not with lifetime employment, but doing away with seniority-based promotion. So now it gets interesting because, it's no longer, right? Let's just manage down, to allow for the slowest ship to be, part of the convoy. If you actually incentivize the top performers, right, then it gets interesting. That means that now women, right, are going to be part of the equation because, again, if you do take a lifetime break because, for family reasons, and if you want to come back into employment, if you've got a merit-based system, all of a sudden this can actually work. If you're a non-Japanese, all of a sudden this can actually start to work. It's very, very interesting, to see that this sort of ame to muchi, what do you call it? The carrot and stick, the incentives, right? Yeah. That's where Japan is discarding its proud legacy and is actually incentivizing for top performance.
I'm hoping that it opens doors for the global talent as well to come in at different, so yes,
So
Supriya.
I was going to say that we talked earlier about imperatives for change.
Yes.
One, of course, has been talked about is the demographic non-dividend, but it's also the climate and it's the need to compete in a global economy, which means connect outwards, get global talent, get situations like this one, this excellent conference, where you have global leaders who talk to global leaders and people within and outside Japan. So this sort of best practices and sharing of good practices is bound to have results.
And I think there is a lot that the world has to learn from Japan as well. So it's both ways. Yeah. Lionel, historically, if you look at regulators, they always tend to create like reporting overheads for financial institutions. But how do you see MAS supporting, in making policies which are more future looking and enabling new business? Because as I heard from you that you also incubate startups, so I'm sure it's like having a first-hand experience of what the challenges are, and how does this kind of MAS manage this?
So I think there are three things that worth flagging as a regulator. One is, I think I cited the Payment Services Act in Singapore as an example of a regulator working with the industry to co-create a framework that everyone can abide by, and granted, we still need to iterate with everybody on how it will be applied. That is. That is, I think, a necessary consequence in terms of cost of compliance, right? So Payment Services Act, sorry, I apologize, coming back to the train of thought. The Payment Services Act is something that we co-created with the industry, but getting it right, to Jesper's earlier point, speccing it right is actually quite important, because if you get it wrong, you dial the balance wrong, that's when you start to see the regulatory reporting overheads start to come into play. Now that said, do we assume, again, that the Payment Services Act is the right, calibrated with the right balance, such that everybody is happy? Are we talking about happy landscape in Singapore? No, right? I think that will be a challenge for any regulator, right? Trying to strike the right balance in terms of the regulatory framework, how it's enforced, how it's applied, versus industry practices, right? Because you have to bear in mind that, again, I refer to it as a cost of compliance, a cost of business, right? Because you want startups to flourish, but at the same time, you don't want them to operate in a regulatory asymmetrical manner, such that it infringes on the rights to some extent, or the safeguards that are imposed on financial institutions and their clients, right? So getting the spec of regulatory frameworks right is important. But that said, it's very difficult to do this, in which case, then what is the role of the regulator? Is it going to be a continual discourse with industry and continual tuning? To some extent, yes. But the other bit about it is recognizing that technology is going to play an increasingly central role, it already does, in our lives, and that includes of the regulators as well. In that instance, how can the regulator pair its capacity to continue to iterate and enhance its regulatory frameworks by encouraging alternative tracks and building discourse, as Supriya has said, with the right folks in industry and thought leaders, not just locally but globally, building discourse channels and feedback loops, but also building actual hard capabilities in terms of technology. Actually this diagram actually captures it quite well. Right, multiple elements of technology that can then be baked into the regulatory framework and the thinking. Now in Singapore, one example that we've been trying to work on for actually quite a long time, and we failed publicly one time, right, is the idea of AML, applying technology to this space to allow for the transmission of suspicious activities across banks, right? Because every financial institution, every financial sector operates on the premise that your data with your bank is sacrosanct, right? And you don't want that data to be shared freely, to use the word loosely, with other financial institutions, right? And if in that instance, right, how do you then deter criminals from then abusing relationships with multiple financial institutions to their benefit, right? One thing that the MES has been trying to do is encourage, co-create with the industry, co-develop the concept of a centralized utility, a KYC utility. And we did that several years back. The technology was not ready enough, was not mature enough. And so we declared to everybody that, look, we tried, but the bill came up, we looked at it, we looked at the spec, could not be done at that point of time. This was back in 2016, thereabouts. And so we said, this experiment, we went through a journey, didn't work. But we continued to revisit that and wait for the building of those technological capabilities, right? So as the landscape matured, we are now revisiting that. And actually, if you've been watching MES announcements, they now call it Project Cosmic. It's still a project, right? But the idea that you can bake in much more of the nice buzzwords that we hear in the industry today, LLM, generative AI, AI and machine learning, etc., and try to figure out privacy-preserving ways by which information can be shared without that information exfilling out of a bank environment. So you preserve the confidentiality but extract the key elements. So that's actually an example of a regulatory framework trying to dial in the right way to meet contemporary challenge and harnessing and baking in technology. Now, which means that going forward, the regulatory view will be that as you evolve your frameworks, you also now, increasingly important, have to evolve your technological prowess and capability, right? And blend these two, right? So that's something that the MES has been thinking about. We don't have the answer yet. That's why we still call it Project Cosmic. It's still a project, right? But I think increasingly, if I could crystal ball gaze, this is something that you will see more and more regulators being enthused about. Because the reality is, in this complex slide that Supriya has painted, and you just flip it around, you just think about it from a risk perspective, the risk landscape also gets increasingly complex, and the traditional mechanisms, generationally, not very fit for purpose, right? And here we are in a technology conference. How do you harness these capabilities from all these booths towards that purpose, right? So that's what the regulator probably will be looking at, that's my view.
I think more and more it is imperative that all the different stakeholders work really closely with each other. It's no longer a silo, we can't survive. I just have one last question for Jesper before we close our session today.
The answer is 5.
Thank you. That was the rapid fire question for you. Jesper, this is about the JPY. Now, the Japanese yen.
Oh, God.
Now, that's been quite unstable. How does it impact foreign investors and companies attempting to build, futures here in Japan? Should the FX fluctuation, should it really be a concern for us?
No, it should not be a concern. I mean, it makes me very cheap. It makes all the Japanese human capital even cheaper. Look, currencies move up and down,
right.
And right now, fine, it's a strong dollar. For the time being, I think that's going to continue, but this is not the point. In any asset allocation, in my day job, trying to run, global portfolios, you do not evaluate a company on their currency, right? You evaluate a company, do they create value? Do they not create value? Do they have a strategy that creates value? And the currency part is the last thing that you need to be concerned about. It becomes a question of hedging. The question is there an opportunity set here in Japan? And the answer is yes. You are visiting today the world's largest creditor country. For 38 years, it's not China. For 38 years running, Japan is the world's largest creditor country. This is a homogeneous marketplace, 23 million people, right? Yes, they're old, but you know what? Japan's old are very rich, right? It's very interesting. You have you talk about fintech. If I had to do a fintech startup, right, you will find that over the next decade, there is the equivalent of 1.5 times Japan's GDP, right, is being transferred from the dying generation, from the baby boom generation to the younger generation, and exploit that. I mean, that's where it gets interesting. There's real money that finally is starting to flow.
Thank you. Thank you so much. I would like to now close the panel here, discussion here. But before that, I just wanted to touch upon one small thing which we were discussing recently, which is about the Japan ecosystem and the society being risk averse. However, when we just delved into it in the conversation, we realized that Japan takes time. They want to be cautious. But if you look at the earthquake, if you look at Japan, it's like one of the highest seismic activity regions. Now, once they've understood the challenge that's before them, they have come up with a risk management process, whether it is in terms of how does the economy deal with it, how does the process on the ground or the people. I think they've figured that out, and as and when they encounter these situations, it's a risk, it's a challenge, it happens anytime. You have no idea when it's going to happen, how big or small it's going to be. But they have come up with a mechanism to deal with it. So I think that makes it very hopeful. Yes, things might be slow and they might be risk averse, but I think in the end, once they get there, hopefully things are going to look upwards from there. So thank you so much. Is there something you wanted to add, Jesper, before we finish?
No, it's the most resilient place on earth.
Yes.
This thing is the most resilient place on earth. And by the way, you can bitch and moan about Toyota. Oh my God, the old dinosaur. It's the most profitable car company on earth. And not doing EVs all out is taking a huge risk. Right. And it may very well end up being the right choice. Oh, sorry, I'm not.
One of the things that I've heard from every foreigner who's come to Japan, when you come to Japan, you don't like it. You just love it. So it's not one of those things. It takes time, but you fall in love with it. So, and it's also for the people, not just for the place where it is. So yeah, absolutely.
It's because of you guys.
Yes, thank you. Thank you so much. Yeah.
Thank you so much.